Let's go. So there's one big thing happening right now which you need to pay attention to right now if you are holding Bitcoin or any other cryptocurrency. In fact, this is not actually related to the crypto market, but still in a way which I'm going to get into later on in this video, it is vital for the crypto market. So we're obviously going to talk about everything that's going on over on Wall Street and with Gamestop and everything that's going on and how it affects the crypto markets as a whole. First off, I want to talk about a specific clip by Chamath, and I'm not even going to try to pronounce his last name, but he went on CNBC yesterday and talked about this whole situation. And pay attention to what he is saying, and also notice that this is coming from someone who made a fortune on the stock market. So let's get into the clip and then we will take it from there.
Next guest, he tweeted on Tuesday that he'd gone long through call options. Chamath Palihapitiya is the CEO of Social Capital. He joins us now on the phone. Chamath, thank you for being here.
Hi, Scott. How are you?
I'm good, thanks. So you tweeted yesterday that you bought $115 calls in GameStop. Can you tell me what your position is as of this very moment?
Yeah. Can I tell you a little story before all of that, or no?
Why don't you tell me that first, and then we'll go from there.
So this morning I woke up after spending all last night in WallStreetBets, reading about all of this stuff. I ended up closing up my position this morning, and I wanted to announce that I'm taking all the profits that I made, plus my original position. So I'm going to take $500,000, and I'm going to donate to the Barstool Fund for small businesses. But I really want to tell you, beyond the 500 grand donation or the money that I invested, which was, not a huge amount in the grand scheme of that stock or the entire market, what I learned, because I think what I learned over the last couple of days is important for everybody that's watching CNBC.
And that is?
I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into WallStreetBets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and, frankly, a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk, and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes. Their parents lost their jobs. And they've always wondered, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family? And then the third thing is a realization that instead of having idea dinners or, quiet whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means, but I think it takes an enormous amount of faith in the system to be that transparent, to talk about things, and then for each individual to make their own mind up and to do things, whether it's to buy and to sell.
So there's a lot going on here. First of all, if you do not know who Chamath is, he is the CEO of a venture capital firm as well as a long-time Bitcoin investor. So you have probably heard the name in some kind of way related to cryptocurrency before. He has been involved in finance for a long time and is very well educated on the topic. This background makes what he's saying hold even more importance. This is a person who has become a billionaire in large part by investing in traditional markets, but he is not siding with the hedge funds and other Wall Street firms in this argument. So, of course, you're asking, what exactly is the ongoing argument? Well, to understand that, we must go back to the beginning of the insane events that have been going on in the stock market, and it all started in the subreddit WallStreetBets. WSB is well known for being home to traders who often YOLO, ape large amounts of money into extremely risky options investments. So these investments either lose their entire value or return numerous multiples of their initial capital. This high-risk, high-reward strategy has helped a community which recently surpassed 3 million members to bond over sharing their picks for which stocks to buy. After all, no one has enough time to analyze every stock out there, so why not share your research and benefit from the research of other members as well? And this was all going well until the subreddit discovered that some hedge funds, most notably Melvin Capital, were shorting GameStop extremely hard. Because of this, GameStop stock price was very low and the subreddit decided it was a good time to start buying. And oh boy. Let's have a quick look at the GameStop chart, and it is easy to see where the members started to buy. The stock took off from the mid-teens and is now above $340. That's about a 20x in 3 weeks. Even in crypto, that would be impressive, but in the stock market, that is completely insane. After realizing how much power the subreddit actually had when they all banded together, they decided to start buying other heavily shorted stocks such as AMC, NOK, and a few others. Obviously, when these stocks started pumping to the moon, the hedge funds shorting them began losing a lot of money. I think that everyone who are into leverage trading already know how this works, but this is what we call a short squeeze, and they started losing literally billions in a matter of days, and so they were not happy. This brings us to where we are right now. There are multiple hedge funds and financial analysts calling for the SEC and other regulatory bodies to step in and do something. And this is what Chamath and Wapner were debating. Speaking to the benefit of the subreddit, Chamath explains that nothing going on is illegal. There are no laws about discussing the benefits of buying a stock in a public forum. These are just retail investors who all agreed that GameStop and the other stocks were a good investment at the low prices that they had reached due to being shorted by Wall Street. And so here is the thing. As Chamath pointed out in the video, there are a lot of very intelligent investors in the group, and the fact that they pointed out what was going on with massive shorts against GameStop is not illegal in any way at all either. And so of course, on the other side of the argument, these hedge funds, they are not happy. So they started to claim that the subreddit is actually performing illegal manipulation of the markets. Unfortunately for WallStreetBets, the subreddit, the hedge funds and the other Wall Street investors are extremely wealthy and powerful, and already the WallStreetBets Discord has been shut down, and the WallStreetBets subreddit was forced to close temporarily as well. But as of right now, it is back open for the time being at least. But along with the attempts to break up the WallStreetBets community, multiple brokers forcefully stopped trading of tickers like GameStop and the others during open market hours. Not because of a circuit breaker or anything on the actual stock exchange, but because the brokers themselves decided to limit who could take those trades specific to those stocks. So also the SEC has announced that they are investigating the recent events. So wow, and this brings us to how this whole series of events is beneficial for crypto. The fact that as soon as retail investors started succeeding at making significant amounts of money as a result of squeezing the hedge fund shorts, those with wealth and power on the losing side of the trades immediately started putting pressure on Reddit, Discord, regulators to crack down on the community. And those efforts have been already partially successful, and that's basically what I mentioned before. And trading is a zero-sum game, at least in theory. Money printing can skew things a little. Regardless, whenever someone takes a winning trade, there is someone on the other side who lost money. By far, the majority of the time, it is the hedge funds and investment firms that are taking the winning trades. They are able to go on CNBC telling that this is market manipulation. They are able to, with their powerful connections, go to the regulators and, forcefully, not forcefully, but, influence them to one or the other decision. And not only that, a lot of the time they are actually able to influence the market itself because they have so much money, so that when they take trades, they can literally move the market to ensure that they are in a profit, and then going on TV telling all of the retail investors to buy it as well. What is making retail investors mad is that as soon as they do the exact same thing, efforts to shut them down immediately began. Unfortunately for them, it is very easy to restrict people from trading on stock markets. They require extensive KYC, and most brokers force users to agree to terms of service that include an agreement that users can be removed from the brokerage at any point. Many people know this, but it was never relevant until it actually started happening this week. So, what is the solution? Of course, decentralized finance, guys. Platforms such as Synthetics, Injective, and others are completely permissionless and allow the trading of traditional assets. This event could be the catalyst that was needed to start pushing people to discover those platforms as ways to invest without the worry of being blocked from trading or having accounts shut down. The fact is, hedge funds and other Wall Street firms do have influence over regulators and other forces over the markets because they have massive amounts of money. And whether people like it or not, money brings power. Another thing Chamath pointed out is that in the events such as the 2008 crash, and yeah, I really like him bringing this out, banks and other major investment entities were actually bailed out by the government after they took on too much risk and lost a lot of money. When a WallStreetBets user or any other retail investors takes a risky position and loses their money, it's gone. No one is going to give them a refund. This is part of what is making retail investors especially angry because they took very risky investments with their own money knowing they could lose it all. They were basically going against Wall Street. And now that those investments paid off at the expense of the hedge funds, those funds are once again trying to say not fair and give me a refund please. Aside from the fact that this whole event is amazing advertising for decentralized trading platforms, it is also once again drawing attention to the need of decentralized social platforms. All it took was some angry rich people and a community of several million individuals was shut down. That would not have been possible if they were hosting their forum on a decentralized network. The first decentralized social platform that creates a reliable and easy to use end product is likely going to be extremely successful. So what do y'all think about what's going on? Do you think that WallStreetBets did anything wrong? Let me know in the comments and make sure to subscribe so you do not miss out on any future videos.